and welcome to Startup Street. I'm Ritu Singh, and with me are Shruti Mishra and Arundhati Ramanan. Here are the key headlines from the startup world. Quick commerce company Zepto is set to raise up to $500 million in a fresh funding round. Sources say existing investors will lead the round, which values the company at $7 billion.
Chai Biscuit, a digital content platform, has raised $5 million seed funding round led by InfoEdge Ventures and General Catalyst. The funding will power the launch and growth of Chai Shots, a mobile-first short-form OTT platform designed to deliver fiction in ultra-short formats.
CCI has cleared a proposal by private equity firm Kedara Capital to acquire a stake in SmartShift Logistics Solutions, which is the parent company of on-demand logistics turned unicorn Porter. Now, Kedara is acquiring a stake through its two affiliates, Sapphire Holding and Fund4AIF, in the company.
Apple has named Sabi Khan as its new chief operating officer. Khan will take over from Jeff Williams as part of a long-planned succession. Sabi Khan currently serves as senior vice president of operations and has been with Apple for 3 decades. Khan is set to officially take over the COO role later this month.
And Starlink has received a license from India's space regulator to launch commercial operations in the country, clearing the only remaining regulatory hurdle for the satellite provider to enter the market, as per a Reuters report. The Elon Musk-led firm has been waiting since 2022 for licenses to operate commercially in India. Well, those are the key headlines from the startup world that we're tracking for you today. Now, on to our top story today. Quick commerce giant Zepto is believed to be in advanced stage talks to raise $450 to $500 million from existing investors in what will be a fresh funding round. Now, sources have told CNBC-TV18 this funding round will value the company at $7 billion. Aishwarya Anand joins us now with more details on the story. Aishwarya, take us through their fundraising plans.
Zepto is gearing up for another major fundraise. Sources have confirmed to CNBC-TV18 that the IPO-bound quick commerce unicorn is in advanced talks to raise $450 to $500 million in primary capital at a post-money valuation of $7 billion, a sharp 40% jump from its $5 billion valuation last year, when it raised $1.3 billion. The round will be led by General Catalyst and Avenir Growth, with other existing investors expected to participate on a pro-rata basis. Now, this comes as part of Zepto's broader strategy to increase domestic ownership ahead of a potential public listing. In May this year, Motilal Oswal and Ramdeo Agrawal invested $50 million each in their personal capacities to acquire stakes. Meanwhile, competition is intensifying. According to ICICI Securities, Blinkit's gross order value grew over 25% on a sequential basis in the first quarter of this fiscal year, with Swiggy's Instamart rising 22%. Datum Intelligence reports that Zepto's daily active users fell from 5.5 million in December 2024 to 4.9 million in June 2025, while Blinkit rose to 6.2 million. Despite rising competition, Zepto remains a strong player. As per a Citi report, while Blinkit leads the market with a 41% share, Zepto is either equal or slightly ahead of Swiggy Instamart's 23% market share.
Well, Aishwarya, thank you for those details. Appreciate you joining us. Moving on, remittances to India have surged from $82 billion in 2019 to $129 billion in 2024. But despite this growing inflow, the NRI share in mutual fund assets has declined from 2.9% to 2.3%. This shows that regulations not intent seem to be the barrier. One startup is looking to change that. Belong, a fintech app built exclusively for non-resident Indians, has just announced its official launch along with a $5 million seed round led by Elevation Capital. The round also saw participation from Relentless Ventures and a host of marquee angel investors. Joining us now to talk about the platform and the vision behind it is Ankur Chaudhary, the co-founder and CEO of Belong. Ankur, welcome to Startup Street. Let's first talk about how Belong is building for the 35 million strong NRI community. Some of the friction NRIs face when investing in India are high conversion costs, complex KYC or repatriation hassles. Tell us, why have traditional players failed to solve this, and what is Belong doing differently?
Thank you for inviting me to the show. So the primary issue, as you have already pointed out, is of regulation. So there are complex regulations around cross-border banking and investments, and that is why traditional players have faced these challenges. Now, what is Belong doing differently in order to solve these problems is that from a regulatory perspective, it is based out of GIFT City, which is India's international financial center, where regulations have been relaxed specifically in order to attract foreign capital into India. So there is a single KYC format for all GIFT City products, whether it is investments, banking, insurance. The remittances into and out of GIFT City are not restricted in any way. And the most of the products are denominated in USD so that the conversion costs are very low.
Okay. Ankur, you claim to be the first fintech to offer retail products through GIFT City. Like you mentioned, you've secured a payment services provider license and broker-dealer license through GIFT City to build innovative and well-regulated products for NRIs. Explain what that means for NRIs and how it changes the game really for cross-border investing.
So as a payment services provider in GIFT City, basically we can move money in and out of GIFT City in a safe and regulated way for NRIs. Now this money can then further be used for any savings or investment products. So currently we are live with a USD denominated fixed deposit for NRIs. After this, we'll be launching some equity products via our other licenses as well. So as I said, the GIFT City regulatory platform actually provides a regulatory light environment for NRIs to participate in India's growth story. And through Belong, that is what we are enabling.
All right. Like you mentioned, you're starting with USD fixed deposits for NRIs in the UAE. Tell us why this market and why this product. First, also, how does the product work on ground? No NRE, NRO accounts, tax-free returns in India, INR depreciation hedge. It almost sounds too good to be true.
Yeah. So first of all, we chose UAE because it has a very high concentration of NRIs. It's one of the largest NRI populations globally, and also NRIs in UAE have a high propensity to invest in India. Coming to fixed deposits, so they are a very simple product to understand. Indians love it, whether they are resident Indians or NRIs.
Yes.
Because of their safety and fixed returns. So it's a very simple product to understand. Hence, it was an obvious, place for us to start. And the benefits that we have mentioned, they're primarily due to the nature of GIFT City itself. It is structured as a global financial hub, so we can offer these US dollar denominated products like these fixed deposits, and NRIs can invest directly from their foreign bank account, right? And with tax benefits that the GIFT City provides.
Okay. Ankur, you're also building tools like an NRI FD Explorer, Compliance Compass, and a rupee versus dollar tracker. What's the larger product vision here? Is this going to be a full stack financial home for NRIs?
Yes, very much so. So NRIs are juggling, multiple time zones, multiple currencies, and multiple regulations, right? It's not easy for them. Even something as basic as understanding whether you are an NRI or not is a task. Like there's an entire section of IT Act just on this. So we want to give them all the tools that they need in order to make better financial decisions when it comes to saving, investing, and staying compliant in India.
Okay. Ankur, you're offering India tax filing without the typical NRI markup. How big is the opportunity in simplifying compliance for NRIs?
Yeah, so there are about 16 million NRIs, across the world. Most of them, have some form of income in India, whether it is through interest from bank deposits or through rental income from their property investments or capital gains, from their equity investments. Now, with increased scrutiny and data collection from the income tax department, compliance is today one of the top concerns of NRIs, especially those who are looking to move back to India at some point in future. Also, apart from being compliant, India has beneficial DTA arrangements with several countries with large NRI populations, like UAE, for example, under which NRIs can get significant, tax benefits. But for that also, they need to file taxes in India. So it's a huge opportunity for us.
Let's get to the seed funding now. How will the $5 million fundraise be deployed? What's your immediate roadmap over the next 12 to 18 months? And beyond the UAE, which markets are next? What new products are in the pipeline? Mutual funds, global insurance, NRI cards? What's the big vision, Ankur?
Yeah, so the funds that we have raised will primarily be used for three things. One is to acquire more licenses in GIFT City so that we can build more NRI-focused products. Then we want to expand our team as well. And the third bucket is for customer acquisition across multiple geographies. So we are starting with UAE. After that, we plan to expand to other GCC countries like Saudi Arabia, Qatar, Doha, and then after that expand to UK, and then eventually to US. In terms of product roadmap, we are already live with the US dollar denominated fixed deposit. After that, we are working on some equity products like Gift City based mutual funds and AIFs, trading in US equities and Indian equities, and also global coverage, insurance, and international cards. So everything, we are building out of Gift City. So in a sense, you can say the bigger vision is to provide a full financial suite of products for NRIs, almost like a bank for NRIs.
Okay, a bank for NRIs. Well, on that note, it's time for me to wrap up our conversation. Many thanks, Ankur, for joining us today on Startup Street. Wish you the very best for all your growth plans.
Thank you so much.
Moving on, India's fine jewellery market is undergoing a transformation and lab-grown diamonds are at the heart of it. Aukera has just raised $15 million in fresh funding. The round was led by Peak 15 partners with participation from Fireside Ventures and others. In just 2 years, Aukera has expanded to 13 company-owned stores across key Indian cities. This fundraise will power their next phase of growth, from retail expansion and product innovation to brand building, as Aukera looks to become a 1,000 crore rupee label and redefine what luxury means for the modern Indian consumer. So how is Aukera challenging legacy players and building trust in a new category? Let's find out. Joining me now on the hot seat is Lisa Muketkar, the founder and CEO of Aukera. Lisa, thank you so much for taking time out and being here with us on Startup Street. Aukera was launched 2 years ago, right? Talk to us about why you decided to embark on this journey of lab-grown diamonds. There are a clutch of firms that have entered the space, intensifying competition. So how are you sort of staying ahead of that as well?
Thanks, Arundhati, for having me. It's my pleasure to be here. Started this business simply because if you saw what was happening in the precious jewelry market with diamonds, the way prices were going, you were getting smaller and smaller and, yellowish color diamonds by the end of it. Lab-grown diamonds came along and challenged everything that Mine Diamonds were doing. You saw a disruption in the US, and we've begun to see the same play out in India. So for those of you who don't know, lab-grown diamonds just offer a significantly better product at a significantly advantageous price. So with that kind of consumer value proposition, it's hard to not want to do something like this. And yes, there are several other brands. It's becoming a crowded market already. But I believe that with Aukera's strategy and Aukera's vision and the team behind it, we're very clearly poised to be leaders in the market.
And we will discuss that strategy that Aukera has a little bit further on in the show. But let's talk about the fundraise. How will this $15 million capital infusion fuel the next phase of growth for the company? What would be the immediate focus?
So it's primarily three things. One is really retail footprint expansion. We believe that even though we're an omni brand, consumers really enjoy shopping jewelry in physical stores. So expanding our retail footprint is going to be one key usage of funds. The other thing is really to build the brand out, which means marketing, and build the organization, because we're building a business for the long term.
Sure. And, speaking about your retail presence, you've grown to about 13 stores in just 2 years. What's sort of the roadmap now? How many cities are you planning on entering? And what's the ideal store count that you want to have in the next 12 to 18 months?
So we're currently in 3 cities, and we will have 15 stores, in fact, in the next 2 weeks. We're in NCR, we're in Hyderabad, and we're in Bangalore. We're looking at expanding further in these 3 areas, but also expanding to the rest of the country, because Aukera is clearly looking at being a national player.
So you're looking at being a national player, but you're very focused on building this sort of big retail-led brand presence in an increasingly digital world. Why the heavy focus on the offline space, and what role will online or the omni-channel play in your strategy?
Sure. So, Arundhati, you will understand that women really like to touch and experience jewelry physically. They look for trust, and therefore a physical retail store is extremely important. So the omni-channel play is important because discovery happens online very clearly, but conversion really happens in store. That's been our experience, and I think that's the experience of brands across the category.
Sure. And, you have spoken about becoming a 1,000 crore rupee brand in the next 5 to 7 years. What gives you sort of that confidence to scale that fast? Is it, repeat customers, ticket side, or, sort of a clear market shift right now?
Yeah, so it is really a seismic shift that we expect that we're going to be seeing in the market. And that's simply because of the consumer value proposition that lab-grown diamonds offers, and the kind of jewelry and the kind of service experience that Aukera offers. So we've seen a tremendous increase in the customer walk-ins, in interest, in conversions that we've had over the last 2 years, so much that we're looking at really ramping up our entire expansion plan. And I think, like in many categories, we will see a hockey stick, curve that's happening very soon. We're at a tipping point, we believe, where you can see consumers just shifting to lab-grown diamonds from mined diamonds. Also, there are new customers entering the category. That's happening as well, because I don't know if you know, but diamonds has less than a 10% penetration in India. So there are new customers that will enter the category, and the category will expand. But yes, there is a clear shift from mined diamonds to lab-grown diamonds.
So clearly at that tipping point right about now. But if you could sort of, tell us a little bit more about your design strategy, right? How are you sort of differentiating your collections in a space where sort of legacy brands dominate on heritage and trust? So if you could talk to us about your design strategy, as well as, the kind of clients that you're catering to.
Sure. So the first thing about design strategy, I think, first of all, our view is not about one collection or the other. Our view on design is that design means multiple things. One of them is innovation, one of them is craftsmanship, and yes, of course, there's the aesthetic. Aukera has a team that focuses on innovation because we believe that it's part of our DNA to bring a better product to customers, and lab-grown diamonds offers the kind of innovation that we want to do. So we're constantly pushing the boundaries to see how we can make better diamonds, larger diamonds, better quality diamonds, colors, shapes, really pushing in terms of the cuts that we can do to make more brilliant, larger, more beautiful diamonds. That's one part of it. The other part of it is in terms of craftsmanship, and there's so much there again that can be done to bring in better finishes, a lot more beauty that can be added to a product that is bought for desire and that is meant to bring joy to women. So there's a lot that we push by way of design, craftsmanship, and innovation. And I think that's what's different. It's not about one collection or the other. We have that, but there's a lot more that goes into Aukera's design strategy.
So a lot more that goes into it. But, before I let you go, if you could quickly tell us, what about revenues? Where are you currently at? What are you clocking, and where do you hope to end this year?
So we expect that we'll be ending this year with about 250 crores. That's our expectation. It could be better. A lot depends on the upcoming season. But at the very least, we'll be at 250 crores.
All right. So 250 crores is what you're looking to end this year at. All right, Lisa, thank you so much for taking time out and being here with us on Startup Street.
Thank you, Arundhati.
Well, with that, it's time for us to head into a short break. But coming up on the other side, new age stockbroking platform Sahi recently secured $10.5 million in a Series A funding round. Manish Jain, the co-founder and CPO of the company, discusses the company's growth plan and more. Stay tuned.
welcome back. You're watching Startup Street. Now, new age stockbroking platform Sahi recently secured $10.5 million in a Series A round that was led by existing investors Accel and Elevation Capital just months after its launch in December of last year. Now, the platform, which says it charges 50% lower fees than competitors, claims to have had 200,000 plus app downloads and active traders growing at 50% month over month in the last 6 months. For more on this, joining me now is Manish Jain, the co-founder and CPO of the company, for the relevance of this funding and the company's growth path ahead. Manish, thank you very much for your time here on CNBC-TV18. $10.5 million in just 6 months since launch. What convinced Accel and Elevation to double down so quickly, and what is your plan to deploy the capital?
Thank you, Ritu. It's a pleasure for me to be here. So let me tell you about the Sahis, why we are building Sahi at Sahi. Our mission is to give Indians retail traders a high performance trading platform with a speed and precision which all professional traders have access to currently. And we started with this mission. And in the past 5 to 7 years, you could see that the ease of access has been solved, but most platforms are still one size fits all. They're very clunky, they're very fragmented, they're very slow. And that is why we have built Sahi with an integrated analysis and execution engine, which is designed to keep the traders in a mental state of flow, where the action and decision happens very seamlessly. So we saw very, very great early adoption, and we saw a lot of user love in the last 7 months, which led to the second round of funding.
Okay, and how do you plan to deploy this money?
Right. So there are 3 main areas, Ritu, where we plan to deploy this money. One is we definitely want to scale our user base because we have seen great traction. Second is we want to enhance our product and technology offering. Particularly we want to incorporate a lot of automation and AI-based features. And thirdly, we want to grow our team. Currently, we are a 35-member team. Yeah.
All right. Speaking of growing your user base, you say that you have 200,000 plus downloads in 6 months and 50% month-on-month trader growth. Is this kind of trend going to be sustainable going ahead? You're starting with a small base, and what has driven this kind of engagement in the last 6 months or so?
Yeah, I think what has driven the engagement, Ritu, is that users have really appreciated that we have thought very deeply about their journeys, and we have built very specific journey for each of the different trader and investor class. And that is why there is this heavy adoption. In the last 7 months, we have executed more than 5 million orders on Sahi already. And at our current pace, we are doubling our business metrics every 2 months. Our aim by end of this financial year is to grow 5x from here and be the go-to choice for every active trader and every active investor in India. That Sahi should be their go-to choice.
Manish, I'm sure what's also helping is that you say you're charging 50% less in brokerage fees and still offering these advanced tools. So tell us what your business model really is, and with this kind of discount that you're offering, what kind of revenues and profits are you clocking? And again, what are the projections you can give us?
Sure. So see, we are able to offer this lower brokerage because we are starting in this new era of AI. All our teams are AI driven. Each of our engineers are a lot more productive. And that is why we want to pass on all these benefits to our consumers. So it's not really a discount. We are going to keep our cost model low, and we pass on all these benefits to our users. In terms of our revenues, we are a transaction business, so we'll continue to earn only from these transactions. We do plan to launch a Sahi Plus or a Sahi Black sort of a subscription plan later in coming months once we have built a larger product suite.
But, just to pick up on that again, legacy brokers are also cutting fees and they're also launching new tech. While, of course, you don't have the burden of legacy, you're using AI tools, so are your competitors. So what is really going to be your moat?
So the speed of innovation, I would say, would be our moat, because we are a very small team. We are a very highly powered team, and we are very, very close to our users. We talk to these users on every day, and we are able to roll out the feature request in a week or 2 weeks time, and we are able to move very fast. And that's our moat right now. But we are very super focused on different kind of users. And so we are not going to build a one size fits solution, which all the existing platforms have currently are.
Just take a minute and to explain to our viewers very simply what you say you built is a chart-first trading experience. Can you explain what that means and how it's different from what, say, a Zerodha or a Dhan or an Upstocks is offering today?
Right. So, Sahi, I would say, so like there are two big pillars on which we have built our offering. Okay, first is we have built our in-house charts, and second is we have built our proprietary order execution stack. Now, how is this very different from existing stack is existing brokers is that they all provide one size fit all solution. You have to switch between multiple screens, you have to search, then you have to go to chart, orders, position. So you keep jumping across. What we have done is, because we have built our own chart, a trader does not have to leave the screen. Your analysis, your execution, your managing of position, everything happens on the chart, and you are never leaving the chart. So there is no context switching. And that is how the users are in their mental state of flow. And that is why people are really loving our product.
All right. Manish, let me also ask you, in a space, that is crowded with broking apps, what is the end game really? I mean, we hear from some of your competitors, for instance, that they're vying for a banking license. What do you want to do eventually, say 5 years down the line? Is there a global play at work? Is there a fintech play at work as well?
Ritu, currently we are too deep down focused on solving the problem for our active traders and investors. But if I think of 5 years down the line, we definitely want to be a wealth platform. We want to be a platform which solves the wealth and financial needs for this growing class of Indians.
Okay, the focus right now, as a young company, as it should be, of course, is growing your current business. Manish, we wish you the best with that, and we hope to hear more from you in the future. Thank you very much for your time here today on Startup Street.
Thank you, Ritu.
All right, on that note, we're going to wrap up this edition of Startup Street. More news and updates will continue on the other side, so stay tuned.